So today we have here Steven LaBroi, and there's certain things. I was in a coaching program with Marquell for Client Attraction University, and I was introduced to Steven there. And that one introduction, I can say, literally changed the way I thought even about money and about what it can do. And I would say at that point, before meeting him, I already felt that I was at the pinnacle based off of the stuff that I had learned. And then boom, this came and hit me. So I said, this is one person I'm going to get on this podcast for sure, just because he's a wealth of knowledge and his purpose is different. So you'll see what I mean. Because I know you've possibly seen some agents or I've, I guess dealt with some agents too, where it's like there's a product that they're serving or that they're servicing. And for him, it's not just one product. He looks at the global picture of that human that he's talking, right? Who's in front of him and their family and their goals, and then structure something towards them. That is such a different thing, I'll say, for people within this industry. That's why I won't just bring anybody up here to speak to. So that's what we're speaking to today. So Mr. Steven LaBroi, we do appreciate you coming here. Much respect for you, sir.
Hey, no, respect for you and the ability to be open-minded, because a lot of what we do is habit changing.
Yeah.
And it's a mindset change that if you're open to it, and essentially it's the same verbiage that I have on the back of my book. It's called being positively selfish. We want you to get all the benefit.
Yes.
Normally when you're talking and dealing with other professionals in the financial industry, they're serving you with products that they expect you to know about, but they're more endeared to those products. So they get the majority of the benefit. You just hope that it works.
Right.
So we appreciate being here this morning.
Yeah.
And anything that you call me to do, I'll definitely be there.
Perfect. There's one mantra I now go by, and it's really being able to wake up the next morning and being able to question what you thought was 100% true the day before. Why I say that? Because there's so many breakthroughs when I come to a conversation or any meeting like that. That's when I get the most out of these things. Like I went to Marquell's group to go see how to do Facebook ads, and then look what I end up finding. I'll be, you see where I'm going with that? Because I have to question what I thought was true. So I was like, okay, I'm going to try something. Let me try what this man is saying. And here's the thing. I don't bring people on here. I don't do what it is that they service. Does that make sense? I don't bring anybody on here. I have already gone through the process. I've sent them all of my stuff, my wife's stuff. I was vulnerable as to what our financial situation was at that time, prior to even buying the practice that I have now. I bought one of the products that he was selling or servicing. And with that product, I was able to buy 2 different chairs. I'm using the money from that product to buy 2 different dental chairs. And as of yesterday, we've already had 5 surgeries from another doctor doing work within that chair. And the money is still growing inside the plan, but the money is outside the plan.
Working.
Do you see where I'm? So I know you probably don't understand where we're going now, but that's what we're going to dig into.
We better give them some insight.
Let's give them some insight. Okay.
All right. So what you're doing is proving the concept.
Yeah.
Our company, LaBroi Insurance Group, and it is what it is. We're an insurance strategy firm. And I say strategy because we tear that contract apart. Provide you, our client, with benefits that you can use in your business and in your personal life. When it comes to dentists, period, we looked at the industry, we looked at the individual dentists, professionals, and what is it that you guys have in common? What is it that you guys have to do to operate a lifetime of a career? One, you have to find clients to build a career, build a business. 2, you got to manage debt.
Absolutely.
So those 2 major factors are so paramount to what you do. And the key is you got to manage a fairly large amount of debt to start.
Yeah.
So you're at the top of the mountain trying to come down. All the time, you're building your practice by continually having to incur more debt. You know, I've got a friend who's a vice president at Shine. And talking to him, you know, I mean, they come out with new products all the time. And they walk in a dentist's office and say, this is the latest, and you got to have it. And you can make this amount of money with it. So you're thinking, you know, okay, that makes sense. I'm thinking about the revenue. But we also have to engage the cost of the expense. Now, do we have the money sitting somewhere to spend $100,000 on a new piece of equipment that's going to make us $1 million over time? If we have the client base or the potential market to bring in to handle that? Most of the time we don't, especially if we're in our first 10 years of practice. So guess what we have to do? We got to sign our name. Got to sign our name to some debt.
Yeah.
And, you know, that's been the order of the day for dentists over the last 100 years.
Yeah.
Because you know that you have the ability to make the money. They've proven that. Right. And that's why these equipment companies and other companies knock on your door, and they're in business because they understand the market. Everybody needs your service. Everybody that has gums and teeth, right? And other, challenges that you service.
Right.
Well, and I won't be long, but I'm just saying that we tried to re-engineer and have re-engineered this whole process of having all this mountain of debt all the way to the end of your career life, 50, 60 years old. You've made money, but you finally paid off student loans, finally paid off practice debt, finally paid off a multiple of equipment loans over the years. And you get to a point where hopefully you operated it properly, where you can say, I can sell my practice and finally get my parachute to go and retire. This big amount of money. I'm out of the loan business. I'm out of the dental practice and I can retire. Well, we say that's an old model. What we do is we insert based on your revenues, because we still want you to have a modicum of lifestyle.
Right.
You know, we're operating with some lifestyle, passions. Yeah. And we know that after all that hard work, and 28, 29 years old, 27 years old, finishing dental school, finishing all of the things, that the externship, the fellowships, and the surgery, and you want to live your life. You've done a lot of work. Well, guess what? We want to insert some guaranteed assets, and I use the word guaranteed, that will offset over time some of the ideas of what you used to borrowing money for, even if it's buying a car, or like I say, buying 2 chairs in your practice that have added to the revenue, to the bottom line.
Absolutely.
And around all of this is wrapped a level of protection for your family.
Right.
Because business is risk.
Yeah.
So what is that? I'm gonna let you introduce it, and I can take it from there. But we introduce guaranteed assets. What other advisors come into play to introduce, and I found it to be so disheartening, is they say, hey, give us some of your net dollars. Let's put it in the market. Let's put it in these retirement plans so that you can have potentially, with market risk and potential reward, money way down the line. Well, what about your daily practice?
Right.
What about your daily lifestyle when you need to take a week off to go and rejuvenate your mind? What about your vacations? Right. There's only one pot of money. It grows over time. But at the end of the day, You got to focus on what you are good at, and that's building a practice, building a community of people who are endeared to you, who are referring people to you, who bring their family members to you. That revenue is what you control.
Absolutely.
So we insert an asset that helps you do that.
Absolutely. I mean, just even, because cash management too as well. You always want to keep, as a business owner, that certain amount of cash to feel comfortable, to be make sure you can pay staff, make sure you can pay, air condition break, something is going to break. And you want to have that, in hand. The thing is, I've learned now from Steve too, is where you keep the cash matters. As a matter of fact, that's probably everything. Where you keep the cash is what matters. You keep it, let's say we keep it in the bank. I know a lot of us are hearing that because it's so safe in our mind. Keep it in the bank because we know, okay, tomorrow I can go and get that. But then if that's 0.02% or even if it's 1%, that money is growing or that they're giving to you, then okay, that cash right there is basically negative. That's negative with inflation. But then as a dentist, he also taught me that the biggest risk is myself, because I'm the one going to operate that business. So imagine I'm the risk, and then I'm keeping cash inside the bank that's growing at 1%. So it's like, okay, let's reconsider this thing. That's what I 100%, like I said, learned to be true. And that's when I now opened my eyes. I was like, I can't let this cash go to a company, an insurance company, because you know what? I may not get it back, or it's going to be something where they're going to keep the money until I just die. And that's what they're going, or it ain't even going to work. Like I'm trying to bring up the things that are in our minds. It's not going to work. Or if you're thinking about life insurance, you're already thinking about dying. So why would you do that this early? These are the thoughts that I'm kind of giving them that I had to fight through to trust Steven enough to be like, okay, I'm about to let this go, or this cash right here go to this and see what I can do with it. So with that cash now, let's say with the plan, I'm able to put money inside a plan. And that right there is already there. There's already going to be, there's what they call a death benefit. And there's already going to be what you call your cash benefit as that thing grows. So I'll put money within that plan. And guess what? I'm able to now go and, if I need it, take some money out of that, use it for my business, use it for, even like Mr. LaBroi said, use it for a vacation and put it back in there. Here's the thing with it. That money within that plan is acting as if the money is still in there, meaning it's still, there's even still some dividends going in there. You still have a benefit to where if anything happens, it's protected you. So already right there, that already is 3 more advantages than keeping the money inside the bank account. Right there. Oh my God. Do you see where I'm going?
You are on it.
I mean, I've learned by experience. This is experience for us. So I'll let you just, continue with it. But I would like for you to possibly tell them, what do you see as the common mistakes, first off, right? That, let's say, dentists, physicians, what they're making, these type of mistakes with cash management in the practice ownership initially, and then possibly give them the example of someone who's used it correctly and what it looks like at the end of their career or their business versus the opposite.
And I appreciate that. Let me bring it home and give it some foundation, because we're talking about an issue, life insurance. Let's just bring it out.
Yeah.
That is a 150-year-old industry.
Wow.
That is a contract. Policies are contracts that, if we strategically design it properly, you get certain benefits. So what I do, I sent you these 2 books.
Yep.
Out of my own pocket. My book here that I wrote, Build Your Human Equity Line of Credit.
Yeah.
And one of my colleagues' books that's called Rich Dentist, Poor Dentist.
Yeah.
First of all, these are foundational pieces to help you begin to cure your thoughts, whatever they may be. I tell anybody, Chris, that 100% of people I talk to have a preconception of life insurance.
Yes.
Whether a 100%.
Yeah.
Some preconception of life insurance. I was talking to a woman at dinner last night. Her conception of life insurance She laid it out.
Yeah.
Very few people understand how to strategically design a policy to benefit them. So let's talk contracts.
Okay.
Contracts, you sign them all the time. Agents, salespeople, somebody comes in your office to sign an agreement. Do you get a chance to review that agreement? Maybe. Do you send it to your lawyer? Possibly. Do you amend that agreement at all? It all takes? More than likely not. Because the company is serving that, is telling you this is our terms.
Correct.
Well, understand, a contract is between you and the company, and you can ask for concessions. They can say no, you can go somewhere else. Well, with life insurance, you can ask for concessions if you know what concessions to ask for. And we show you how to ask for the kind of concessions that build that cash value, that put that money in a place for it to reside that's stronger than the commercial banks. So with that being the case, I just need to assist you in operating a bankish type of a process. It has some little nuances that are just a little different than you going with your debit card or standing in line, right, cashing a check with the cashier. No, doesn't have that. The nuances are a little different. You have to fill out a little form and they send you your money. You borrow it. You pay yourself back. It's private. The interest you pay back to the company is a once a year type interest. The money bills at an interest rate that's normally equal or a little bit better than the loan interest. The money continues to build, like you said, while you have a loan outstanding, because you're taking a loan from the insurance company's bucket, right, not directly from your policy. There are these little nuances that have been set in motion for insurance companies because insurance companies have their own tax code. I have clients who are earning interest in their policies, and during tax time, they ask, do I need to give this policy to my tax accountant? No, it's private. Absolutely. So whatever you earn in there is tax-free. But so what I explained to a couple dentists that are trying, that, you know, in the beginning, they get this process, but they're trying to figure it out, is that take a loan. We got to look for some very disposable net income that's at the bottom of the bottom line, because we need you to operate with a certain amount of direct cash that you can get to right away.
Right.
We call it levels of liquidity. Yeah. So I need you to be able to go to the bank next door and get some money to buy your staff lunch today.
All right.
I need you to be able to go grab a few dollars and, you know, buy some Girl Scout cookies from the person that comes in or what have you. But I also need you to have access to monies that may take about 3 to 4 days to get to purchase that chair.
Yeah.
Or to pay the credit card off that you use to get points.
Yeah. Okay.
To earn benefits, but yet pay it off so you can keep your business credit and personal credit high and take your time and put the money back in the policy. You'll tell them in a few, Chris, how often do you have to pay the policy back? It's really totally up to you.
Right.
That's what gives you a benefit. So our dentists who had it for a long time, they've built, and even myself, I have the product. You always ask your agent, do they have the product they're selling?
That's huge. Absolutely.
Always ask them, do they have the product they're selling?
That's good.
Over 5 years, I've been able to put $100,000 in my policy, cash value, and have an $800,000 death benefit. Well, the death benefit is my umbrella that you see that's indicative of insurance. Should something happen to me, car accident, whatever, you know, these are life circumstances.
Yeah.
My business, my life, my assets will all be taken care of. Yeah. But we are not as concerned about that. We're concerned about our day to day. So my cash value, my my long-term dentist prospect cash value. I told you my big guy puts $12,000 a month in, net disposable, because his practices bring in about $60,000 a month, $12,000 a month. Now you have to be underwritten for these policies. You got to have a certain amount of health and age.
So what does that mean? So that, I mean, there's a lot. So let's actually break some of that down.
Let's peel it back.
Let's peel it back even a little bit. First, I do want to go back to how we understand where the money is coming from, whether it's from the plan itself or from the insurance company, like explaining that concept. And then we really want to explain too, like how starting early based upon health increases your chances of the type of terms you're going to get with the insurance policy, though we start from that. And the last one I want to explain, just so I don't forget it, is how even the banks, I remember you told me this, even the banks have policies with some of these insurance. So this is go ahead and
we'll break it. We'll break it. This thing's got to be broke down in a lot of pieces, right?
It's so much. Yeah.
So you get an insurance company. Most insurance companies have been around at least 100 years.
Gotcha.
They have built their business on actuarial science. Actuarial scientists are mathematicians that are smarter than all of us.
Yes.
They determine life expectancy.
Yes.
The idea of an insurance company to offer you a policy says, you are healthy, you are young. Yeah. We want you because you have the propensity to pay this policy over a lifetime.
Yeah.
We give you the best rate. We give you the highest amount of death benefit. If you understand how to manage that policy, we even give you a ton of cash value in that policy to go with. So when you're young, even at 15 days old for your newborn baby, insurance companies just give you the options, right? They say, hey, whatever, They also know, actuarial scientists know, that some young people will perish, will pass. But they have statistical analysis that says X amount of the population will live so long. That's why when people wait until they're 80 years old to ask for a life insurance policy, it's so expensive because their life expectancy, by virtue of the actuarial scientists, is shorter.
Right.
But guess what? Life insurance policies have extended to 121 years of age. It says something about this population and what you guys do for a living, because the practice of dentistry and medicine has extended the life expectancy of humans.
Wow.
All right. I just wanted to break that down because when you're coming out of dental school, when you're beginning to make money, is when you got to start looking at this.
Yep.
Here's the other linchpin.
Yep.
You can have more than one policy.
Yes, sir.
You can have 10 policies if you qualify and have the funds. So you got what we call individual banks, right? So you asked me about, I know this third part you asked me is about banks and corporations that own insurance.
Yes.
You can look these things up. The acronym is BOLI, B-O-L-I, bank-owned life insurance. If banks can own life insurance, why? Because life insurance is considered a tier 1 investment by the Federal Reserve and by the investment community. Because guess what? They don't take a whole lot of risk. Banks even take risk. Banks have investments,
right,
in the market and in other vehicles. But in most major cities, you see the life insurance of the insurance companies building is the tallest building in the city. Right?
I didn't even
North Carolina.
It's probably like that building right there.
That might be an insurance. Remember the Transamerica building,
right.
and just start talking about buildings in your city. Most of them are insurance company owned buildings.
Wow.
Because they put money into very conservative but smoldering and nice and easy interest bearing products. Because guess what that policy says? it still says that if you kept our policy from 22 to 82, we still have to pay your family the face value of the death benefit when you pass. So insurance companies have to maintain a certain amount of money to pay out based on the contract. Mm-hmm. So again, BOLI is bank-owned life insurance. COLI is corporate-owned life insurance. See, again, if these entities have to also hold money for the different times that we're in, pandemics, invasions, market fluctuations. We're talking about economic changes. Yeah. You know, those things are things you cannot expect or avoid. Right. You know, and all kinds of issues that come up in our business life. Absolutely. The monies that are in insurance companies is there for you at that time. What if another building comes up for you to purchase to expand your business and you need $20,000 down tomorrow? Mm-hmm. Well, you can show the funds in your insurance company that you can get to. Absolutely. To an investor, to a realtor, to a commercial business owner, because the money in these insurance policies are also considered collateralized assets. Absolutely. Let me say this one thing, and I want people to know this. When banks like when the SBA and other banks offer you loan, oftentimes because of the size of the loans, they want collateral. Yep. And they'll ask you for an insurance policy. Sometimes they'll ask you for your home, the home you live in. And you don't want to do that because you don't want that to be at stake with your family. So we say, go get an insurance policy. And some people ask me, well, I got a policy. You got me, Steve, you got me a policy. It's got the cash value in it. And you know, it should be strong enough to go with that particular bank's application. And I said, no. Don't use that. Because when you put the bank in first position to control the policy as collateral, they control the cash value too. Right. So what you want to do is go out and get a term policy, those policies that you see advertised, or you come back through me and you say, give me one of them $20 a month, $500,000 policies that I see on TV. Yeah. I'm young, I'm healthy. Yeah. Or even if it's $100 a month, I'm trying to get $1 million loan. Yeah. That's what you want to put up as collateral. Absolutely. They're just concerned about getting their money back if something should happen to you tragically. Absolutely. So there's strategy around all of this. The key is, again, these loans are private. The opportunity for you to begin to take debt off the table means that you're building these loans or cash values so that you can replace your credit card debt and your bank debt with the money in your policy and have control over how you pay yourself back. If the money in your policy and the loan in your policy is not calculated or is not seen by the credit bureaus, then guess what? If I replace the loan or the credit card debt that I have outside of my policy with the money in my policy, I can keep that debt in my policy as long as I want. It looks to the credit bureau that I have no debt. Right. It looks to the loan officer that I have no debt. Mm-hmm. They don't see what goes on in my policy. So if you think about it over time, if we're able to build these assets for you, they sit there and wait to do good for you. Absolutely. You know, yeah. They just sit there and they're good because these companies are 100 years old. Yeah, they've proven their record. You know, it's really an important thing to have people in your corner, especially when you're growing a business or even just being a healthcare practitioner. You want to have people like this
in your corner, because it could be one or two sentences that they tell you that can literally change whether you're going to sleep at night or not. And why I say that is because it's happened. This is real stuff. I'll even say one that really got me. I remember this was actually about 4 years ago. And I was so afraid of student loans, like that it froze me from doing anything. Meaning I was still an associate. I remember I was still working for a doctor. And I thought I was going to work for a doctor 10 years until I paid that off, because I didn't want to be balancing so much debt and going, and it just took one piece of advice. And it was like, and because I didn't want to refinance the loan from the government loan. And that one was at like 6.8%. You know what I mean? And they'll probably make you pay like $300, and it was a 6-figure loan. So you'll be paying that for the next 30 some whatever years, 28 plus years.
Exactly.
They now said you can refinance it. And right now you can get it at 2.7%, 2.8%. And I was like, nah, because if I do that, then if I pass, that means it's going to go to my wife. Those two things kept me stuck. And then also when they told me was, when you refinance it, you just get a term life policy. Make sure you get it to where it'll cover more than whatever debt it is that you're carrying right now. And then you can go take the risk of starting your practice and having a higher upside. These were like the stepping stones, I think, that it took for me to like free myself to where it's like, it's okay to have the little student loan because of the opportunity that loan was able to give me. So I even restructured in my mind how I thought about the student loan. And then I now started giving a lot of credit to what insurance and like policies can do just with that piece of information.
See, the formula is simple.
Man.
Assets over liabilities equal wealth, right?
It does, yes.
So when you think about the debt you had to incur to get to a income potential, let's just talk this. When you think about the debt you had to incur, but you didn't have to incur that debt. You could have started off making $40,000 or $50,000 as working somewhere, as an employee or what have you. But you say, I'm going to incur this 6 figures worth of debt so that I one day can get to an income potential that I am able to have a modicum lifestyle, with my family.
Right.
So here's what it is. It's all about debt management, right? Yeah. We talk cash flow management. Now let's talk debt management. These are silos.
Yes.
Now, when I talk to people, I tell them to restructure their debt to pay it off over a longer period of time. And they look at me, and they say, oh God, I'm trying to pay this off, because we've been trained to pay things off first. Fast. Do something for the bank first so that we can get out of it. Listen, I'm going to tell you something. You're going to be leveraging debt till you die for the rest of your life, some kind of way. Do you want to be in charge of leveraging it, or do you want them to be in charge of you?
Wow.
When you put in for an application and you hope they approve you, they're in charge of you. When you put in an application and they're going to beg you to take the money, you're in charge of them. Man. So here's the deal. You restructure your debt for a long period in time, taking the amount you pay every month down, freeing up cash that you can use to buy assets that will one day consume the balances of the debt. It's a simple formula. Bring it down, get more cash. That more cash can get you insurance policies, real estate, chairs in your practice, pay the salaries of new associates.
Absolutely.
Get you some products to sell in your lobby area. Yes. It can buy you more.
Absolutely.
Income. Here's the linchpin, and I'm gonna give this to your audience, brother, because you are my guy.
Yeah.
Always make sure your loans have no prepayment penalty. I'm going to say it one more time for those that are still on here. Always make sure your loans have no prepayment penalty. It saves you, because ultimately there's going to be a break even. If I freed up $1,000 and I minimized the amount that I had to pay. Because see, as long as you make the payment, student loans and any other loans, they don't bother you. They think you're going to pay it over the long haul and pay them a boatload of interest.
Right.
So they're happy. Yeah,
Right.
stretch it out.
Right.
Stretch it out, brother.
Right.
We'll take it any kind of way you give it.
Right.
But as long as there's no prepayment penalty and I have this extra $1,000 that I'm not paying them now, and I'm buying into more revenues, more options, policies, more assets, the break even comes quicker.
A lot quicker.
And then you just pay off that loan if you choose to.
If you choose, I think this is when we gotta. This is where we gotta unravel this, because this is what we like talking. So let's say for myself, if I remained an associate, and let's say I'm making $180,000 per year, the taxes were already taken out way before I can even determine what to do with that money. So I made more than 180, but that's what I was able to get. That's number one. But imagine how many years it would take me growing that. Let's say I went to go buy a house that's 400,000 or 500,000. Then I went to go buy a car that's 30,000. And I couldn't tell my boss, hey, like, I want to do it. I'm making 300, 400,000 next year. It's almost impossible. Your hands can only do so much dentistry.
It's
versus
a manufacturing operation.
Right? Versus you saying, okay, I'm going to take, let's say, $300,000 loan and buy a practice. And now, if that practice that you bought for 300,000, let's say within the next 2 years, that practice is doing $1 million, you can now sell that practice for 800,000. So your net worth has just completely changed within 2 years. That's how quickly you are now able, right, to break even with the debts that you have. So in America, one of the quickest ways the leverage, I see it as, if you do it correctly, it's a slingshot. So you coming back, right, physics wise. So when you let go, you can go further. But if you're just trying to jump from right here, there's no sling. You just keep trying to jump, pay off the debt as soon as you can, pay it off as soon as you can pay. You can't go that far. The other person that's leveraging go way further than you once they sling that thing off. So that's what we say when the break even comes earlier, right? Break
even comes earlier because you get there faster.
You get there way faster.
Because guess what? Who do you love more? You or these debtors?
Myself, of course.
Right. If we can create more assets. The formula is so simple. Easy. That's why it seems so hard. Right?
That's true.
Because ultimately, if you have more assets than you have liabilities, just think. Let's just close our eyes and visualize. If you have more assets than you have liabilities, you don't have to come out. You don't have to have more income.
Exactly. Because
your assets usually are spitting off some kind of revenue or income.
Yes.
And it covers your liabilities.
Yes.
The things you owe on, the things you enjoy, the things that are not making you money.
Right.
That's when you're debt free.
Yeah.
That's when you have freedom. That's when you live your life on the terms that you want it lived on. Those people that have mad real estate, those people that have mad life insurance policies, those people that have all this artwork, those people that have all this gold and silver. Let's talk about what asset classes are.
Yeah.
Right?
Yeah.
And if you have way more than that, then it takes for you to live on car, food, clothing. That's food, clothing, and shelter. If your assets consume that on a regular basis and you can slingshot those assets so far out into the future that your son, Chris, and his son, and his son, and his daughter can take advantage of that, that's when we're talking generational.
Absolutely.
Wealth.
Absolutely.
Because we're accumulating. So you put your money in the assets, not into debt.
Right. This is so huge. This is so huge. That's why every time when I even had a client and I introduced him to Steven, it's almost I'll get chills on my back because I was like, this was the day that, like, this is what I was kind of born for. This is when I found, okay, this is a newfound purpose. because I'm always wanting to talk to the seed of the human. It's always the seed I'm looking at, right? And I know you have that kind. That's how we level, because it's like the same kind of thought process. The conversation I'm having right now at this moment is feeding the seed of that person that's listening. And it's like, as long as we're able to allow ourselves to understand something new, you can read. There's so many books to go read about it, but just allow ourselves to understand that something could be different than how we thought it was, and can truly benefit when we're gone, long gone, by us changing our mind, even by our children, just seeing that we're trying to change our mind. Does that make sense? I will even love for my child to see that I am trying to understand something new, a new concept, and do it with my not only my words, but with my actions, to get them something new. To get them a new, and with insurance is not the one I thought it would ever be.
Right.
Until like these books.
It's so phenomenal, Chris.
Man, I don't know how else to say it.
I just re-engineered this whole thought process, and I kept asking myself, why? Why is this industry so old and still thriving?
You know?
Why?
Not many industries do that. That's why we're so surprised by it. Not many industries.
Right. It's older than Amazon, older than Google, older, and still thriving. And you would think that some technology may come along and usurp Google and Amazon one day.
Right.
But insurance companies, their model is so solid. It's based on human equity and the lines of credit that we put in place based on our life. What if humans begin to live to 150 years old? Insurance companies will just stretch their products.
That's it.
To 150 and collect money over that time because of risk. Risk management. There's risk in everything we do. Risk management. That's all they check for is risk, but they know there's risk in the human experience.
Absolutely.
There's risk in the human experience.
Absolutely.
You know, how we eat, how we live, where we go, how we drive, how we fly. Do we fly airplanes? Do we jump off of cliffs? What do we do? Do we fight wars? Are we police officers? There's risk in the human experience. And they've built a model,
of course,
to manage those risks and reward those that understand how to manage that.
Which is key.
Only about 20% of people utilize these types of policies and borrow against their money and utilize it because you think it's a long-term commitment to pay that premium. Right. And you got to stick that in your head, but you stick it in your head against history.
Right.
If history says the economy and devastation and family issues and the human experience goes up and down throughout a lifetime, all you're doing is betting against that and saying, I live in Florida. There's hurricanes that come every year. I'm going to put some money in my insurance policy so that my family can evacuate.
Absolutely.
Because the potential of a hurricane coming every year in Florida is great.
It's great. It's like Houston. Yeah, absolutely. They do it based off of history. And that's why with insurance companies, they're probably one of the smartest companies in the world, because the actuarial scientists, everything that happens, they're documenting it and then quantifying that. So it's not like you're going off of theory, or you're going off of just what happened, like one-offs. This is an umbrella of information that they're using statistics, meaning more than likely, if it happened prior to, it will happen again. I even remember my dad saying one time, they know like whether it's a young man or a young woman under the age of 20, if they're driving a car that's yellow versus red, your insurance premium will be based off of that. Come on. So if you're getting to that level of detail, even for us dentists to understand like the power of insurance, we get paid a lot by insurance companies.
That's right. That's right.
And we've seen the model that they use. Okay, people are paying premiums. They tell us the price in which we will now, decide for each procedure. And so they're able to control when and how they pay us. So they understand something more than what we understand. So the key always is using that, but you being on the right side of things, you being on the right side of the history. And that's what we can do here with this.
Oh my God. This is incredible. You make me think of one major fact that I can throw out, and I don't know how much longer we have, but I'm just going, I want you guys to hear this. Insurance is a vast industry. Wow. Life insurance is the only optional insurance. See, what you just talked about from a dentistry perspective is health insurance. And health insurance in this country at this time is not optional. There's penalties for not having it depending upon the state you live in.
Right, absolutely.
Auto insurance is not optional.
That's true.
It manages against the financial responsibility of the asset, the car. Homeowners insurance is not optional.
Wow.
It manages against the financial responsibility of the asset, the home. Even if you pay off your home, you ask yourself, should I buy insurance? Because who manages the responsibility, the financial responsibility of a home that has no mortgage on it at that time? The homeowner. So if it burns down, who has to build it back up?
Of course.
The homeowner. And you still have to pay taxes on a home that even does not exist. There is some level of tax on a vacant property, some level of tax on a. Do you understand where I'm coming from? This country is built on taxes and solid financial services. Life insurance is optional because are we managing the financial responsibility of?
Yourself.
And your family.
Yeah. It's huge.
Which is why we put ourselves in a position to think that it's okay not to have it. Right. We can wait until we're 80 to get it, to bury ourselves, which I think, again, is an inverse mindset. Because if it's that much more expensive, I should have saved $10,000, $20,000 for a ceremony or to pay my last rites.
Right.
Or I should have had this policy when I was 20,
right,
using it all along the way. And it had $1 million worth of death benefit in it when I'm 80, that my family can use 20,000 and celebrate with another 800,000 my life.
I want people to understand that concept. Okay, I do want them. Let's dig into this part a little bit.
Come on.
Because I was always taught, get the term policy. That's all you need. Don't even try to go, don't do whole life, don't do IU, any of that. Just get the term so you have that umbrella. And then I saw, okay, if I pay this for 30 years, the year 31, I'll possibly be about 80 something years old. All those premiums I paid for the last 30 years, gone.
Well, they're only gone because the policy price starts going up and you decide, I don't want to pay that expensive price anymore. You can keep a term policy for the rest of your life, but after that term, which is a level price, the price starts to go up dramatically.
After your income has gone, right. Okay, so that's good. And that's after your income potential, I would say, for the most part, has now gone down a little bit because you're closer towards the ending. So this is key. But what's the difference if you put it in some of the other vehicles, or if you're able to restructure the contracts? How does that benefit the end user?
Well, again, you use the right word, contracts.
Good.
Let's take the word policy out of it.
Okay.
Because it creates a connotation that creates more a stereotype.
Gotcha.
Policy.
Gotcha.
Let's talk contract.
Okay.
Because there are term policies that have a return of premium, give you all your money back at the end. There are term policies where you can convert into permanent policies, whole life policies, or index policies. These contracts have different provisions.
Wow.
But it's all strategy.
Wow.
Because the strategy where people usually end up getting confused is we never want to think of strategy for a lifetime. We want to just think of strategy
Why is that?
Because we can only see as far as we can visualize.
Okay.
And we never expect your beautiful black hair to turn white.
Right. You can't see that far.
You can't see that far. But the aging process is the same for everyone.
Everybody.
And my next book, my ebook, is talking about aging. Aging. It's the same for everyone. If you watched your great-grandparents when you were a little boy, if you were blessed enough to see them, you probably met them already retired.
Right.
I met my great-grandmother. She was already retired.
Wow.
She had already worked a lifetime as a housekeeper in a hotel in Little Rock, Arkansas, 25 years. When I met her as a child, she was already retired. She had aged. My grandmother was still working, but working towards completing her work as a CNA at a nursing home. My mother was just cresting her career. I was a young child. Now I'm a 57-year-old man. My mother is retired. My grandmother passed at 97. My great-grandmother is long gone to heaven. The aging process takes a lifetime, if you're lucky, to get through. Why not? With insurance companies who plan for a lifetime, life insurance, not auto, you change that every time you change a car. Not homeowners, you could change that as frequently as you need to manage that debt. Not even business insurance.
Absolutely.
You can manage that as you see fit.
Sure.
But life insurance, when you look at what I call the Excel spreadsheet portion, it goes all the way to age 121, whether you live that long or not. We can begin to break that down. It's not telling you you're going to die at 100 years of age. It's just saying that I'm going to manage the risk that can occur when I'm 40, when I'm 50. You're already thinking about when you want to stop working, when I'm 60. I want to actually have $1 million somewhere that I can touch when I'm 70. Those are new and nice goals, but you got to also turn the mindset around and think about you. And that is what life insurance can do in multiple products, in one product, in how you manage it. And the key that I found, Chris, is that money management, that cash flow management is how we manage our budgets, and our spending along the way will allow us to continue to have that product, that contract for a lifetime. And if we can use it while we're living, it makes the difference.
Absolutely.
Because those that had money in their policies during the pandemic were able to give themselves a certain modicum of stress relief. Because the insurance company still gave them their money, even though it was a pandemic. And the banks and the mortgage companies and the credit card companies were giving you a break.
Right.
They were putting that debt on the back end.
Of course.
They still say you had to pay it.
Right.
They just gave you a little moratorium on it. The insurance company allowed me to keep paying my mortgage as it was written, so that I'm not having to keep it that much longer. So understand, we want to take back the power, the leverage of putting assets under us. And as a dentist, you start at the mountain of debt.
Right.
And you try to ski down it, but then you have these levels, you know, where there's a base where you got to get more debt.
Yeah.
You have these levels where you got to get more debt. That's more lasers, more equipment, another location, another vehicle, kid going to college, things that are going to occur while you age.
Right.
If we got assets that will consume that, we have such a smoother ride down the mountain to that time in which we don't owe nobody and our assets are still paying us.
Right.
And you could just enjoy life, whether it's at 60, 50, 40, but it's all a plan. Right. When I hear young people paying off all their student debt in their 30s, that was a plan.
Right.
It's all a plan. And you plan over time, but you manage the variables during that time.
Absolutely.
I don't want to preach, and I appreciate you giving me this time because you know how I feel about this whole process.
Absolutely.
And you embracing it.
Absolutely.
And how I feel about making sure that we understand that there is information we have to find out about.
100%.
You don't have to figure it out.
Right.
While you're pulling someone's root canal.
Right. That's
all you gotta do
thing.
Is find out.
Just find out.
Just find out the answer. Man, wow. You're a blessed man, and I appreciate you.
Man, I appreciate you too, Mr. C. Like they said, it's always, sometimes it's more important being reminded versus taught. Just to hear, even myself, just to hear it again, it just redirects my mind as I leave this room. I leave you here. It redirects the direction that I want or that I intended to go on. You see where I'm going while I'm going down that mountain. So that's huge.
It's like you got you get off track. You got
to
have something to bring you back in line.
That's real.
You know, and it's a lifetime.
Yeah.
Aging. When I meet you again, you'll be older.
Exactly.
We can look back and see what you did that you cannot do anything about. Exactly. But we look forward and see what you can change.
That's big time. That's big time. That's big time.
Are you on the right path?
Right.
I tell anybody, start with the end in mind.
Yeah. Yeah.
Start with the end in mind. The conversations I have with people about the Disneys, the Rockefellers, the Bachelors in Colorado Springs, the Waltons, these, and I know there's some African Americans who've been able to learn this over time because I have a huge network of African Americans who've been bequeathed and have been estate given land in the South and Mississippi and others, and they've been keeping it over generations. Mm. Somebody thought about that.
Wow.
Over time. If your great-grandfather bought some land from some man that didn't want him to have it, but he was able to figure it out.
Wow.
And he had to figure it out because there was no information back then.
Yeah, he didn't have to find
See the difference?
Figure it. Huge.
Once he figured it out and he grabbed that land, he held on to it. He looked at his grandbaby being born, say, she don't even know, but I'm going to leave her this 300 acres. And when she got to be of age and put her through college, she had 300 acres to find out what to do with. Because the times have changed and information is available. So she put it in trust and in wills and in estate plans so that it's locked away from those vultures and those people who knew information way before her, and she's able to keep it in play. So if she has a child, or even if she doesn't, here's the rub. If I show you how to have millions of dollars worth of insurance that helped you while you were living, put you in a cash flow, cash plus tax-free situation, and say you don't have a big family, Here's what you can do. You can affect a young person coming behind you.
Wow.
Teach them what you did.
Wow.
You can affect your church.
Wow.
You can affect the students at your school.
Wow.
A man told me one time that you will live forever if they never stop talking about you. I ask my clients, how long would Marcus Garvey be living? How long would Malcolm X live? How long would Martin Luther King live? Forever.
Wow.
They have schools, they have books. Martin Luther King has a statue in many cities across the world. Street signs. Do something positive, do something powerful, live your life on purpose, use the tools that have been put in place, and live forever.
Wow.
Forever.
Wow. So
wow,
thanks for that. Absolutely. So how could they reach out? How could they reach out to you if they want to get more of this information?
Oh man, boy, what we finished? I'm not finished.
That's the thing. This is his life's work. That made the biggest difference.
No, please, all my socials, LaBroi Insurance Group. That's LABROI insurancegroup.com is my website. LaBroi Insurance Group, Instagram, Steven LaBroi on the screen, LABROI on all socials, Twitter, Instagram, Facebook, LinkedIn, and I'm ready for you. Call me at my office, 202-544-6226. We can have that conversation. It's a paradigm shift. Absolutely. It's a shift in knowledge. It's a shift in mindset. Yeah. But it's all for you. Yeah. And that's what I can leave you with. That's so good. And this has been wonderful.
Absolutely, it has, as always. Thank you so much for your time today. We appreciate you so much.
Thank you, all sir. Right.
Yeah.
Have a good one.
You too. Thanks for tuning in to another episode of the Visionary Dentist podcast. We hope you implement this information and become majorly profitable. For coaching with me, go to workwithdremden.com/free gift. Also check out my YouTube channel at TokesEmden and check me out on Instagram at tokes.emden. All right, make your visions real.